All right, let's jump into a bit of the weekend wrap. Now, where are we at? 10 past 4, thereabouts, and that on 8th of December. So, beautiful day outside, actually. I think, what are we at? This is only 20 degrees. It feels a lot hotter than those that are around. Beautiful sort of weather there at the moment, but still got to get this done, and it's better to get it done now than sort of obviously it's ridiculously late hours. So let's sort of start off with DXY and basically just a little recap of how things sort of finished up sort of throughout the week. Because of course, being the first Friday of the month, we had NFP kicking off, and it was a bit of a weird sort of move through NFP because obviously, as you can see, like this is where the data dropped in that. This is on a 1 hour. We can see the immediate market reaction was this quick sort of dump down to the bottom side here, but of course, bang, springboarded back up, and we actually had a little bit of data out after the NFP, which was, I think, sort of consumer sentiment, and I think as well it was inflation expectations, and that really sort of solidified this sort of bounce, which obviously you can see is quite dramatic, and really sort of came back up, stopped pretty much on point of where we would expect it to be, because of course, we can see how vital this area was here for a support, and it's played a resistance role previously as well. So obviously, first time back up into it, got sold down, came at it again, and as we came into the end of the week, as I normally say, you don't really sort of worry about the last candle or two, but it was finding sellers. At least coming into the end of the week, happy to sort of stop it there as well. So if we have a quick look at just what that data was that sort of came out, we had first of all, we had NFP, which revised up from whatever 12,000 or some ridiculous number last month up to 36. So I guess that's in itself a little bit of a positive for the dollar. Expectations 218, 227. So it did beat, but it's no shocker. It's not like wow, 100,000 out or anything like that. But I think the initial reaction was probably more based off this unemployment rate. 4.1, expected 4.1, ticked up to 4.2. If we jump back on that chart there, you can see that obviously, as I said, as the data came out, it sold and actually had a couple of attempts to sort of continue moving that down. Maybe not on this one. You can see, yeah, obviously, sort of this is the lower time frame here, just to sort of get a bit more into it. We can see that obviously he was trying to sort of get back up here, sort of rallied right up, had another attempt to sort of push it back down, but then obviously overcame it and then kept running up to the top side. Data, as I said, after that were consumer sentiment, which obviously beat expectations, and inflation expectations. So obviously, I think this is probably more of the dark horse sort of one that really sort of pushed it up a little bit. The idea that sort of the inflation expectations are actually sort of moving up a little bit. Obviously, that would be a little bit of sort of a freak out mode for the market, and sort of people sort of going, well, inflation creeping back up, the Fed's going to have to do something about it. Well, they're probably not going to cut, or they're not going to cut as hard, or potentially even hold with a couple of these sort of upcoming meetings if you get that kind of thing. So that's just expectations, not actually like inflation is going up. But if that's how people are sort of thinking about it, well, obviously that's going to sort of play into the sort of how much people sort of are going to be looking to sort of hold the US dollar. Obviously, if they're not cutting, it's going to stay a little bit stronger for a little while longer. So yeah, it really did sort of bounce back up to the top side here. That initial reaction was quite strong because it did really sort of come down, shot down a couple of times, but as you can see, the main thing is this end one over here. So if we have a look on larger sort of time frames, we did get a break of these levels, obviously managed to sort of rally back up and sort of save itself inside or above that sort of horizontal. But we have taken out this sort of rising support. So it is somewhat in a bit of a backtest area here. I think this does need to be respected in the fact that it has broken down here. Doesn't mean that it can't shoot up here before coming back down or even stuff around a little bit and bounce a couple of times up against this, meaning obviously it would still have a little bit of upside to come in it through here. But I think that sort of that does ultimately need to be respected. You probably will see a little bit of a pullback. We didn't really find anything on this, did we? No. A little bit more of a sort of deeper sort of pullback with the US dollar, maybe coming into the end of year. If we have a look, actually, just back to where we were at the end of last year, because Where are we at here? This was the Yeah, so this is the period through end of last year. Obviously, US dollar getting a little bit of a smack down. That was from November. So probably not much that we can take away from that at the moment. Obviously, the second, here we go. Maybe this is what I was more referring to. We had first week of December, obviously, sort of it was a little bit lower from its breakout area. First week of December, we got a little bit of rally up, but the second half, really, the market kind of really got rid of US dollar pretty quickly through this period here. Just quick, I know I'm bouncing back forward, but this is my example here of what I'm expecting. Sort of, see, we had the rising support, we broke it, it still bounced up around the underside of it a couple of times before it actually sort of came down, but ultimately it did respect the fact that this had been broken and it did come down to the downside. So I do think that we have some sort of US dollar sell-off coming. As to sort of how quick, well, we're going to have to wait and see. I think we've got a bit of data out this week. I think US CPI is coming out this week. That's going to sort of weigh into things. And is it maybe it's FOMC, so I might as well have a quick look over the news now. It's either FOMC this week or CPI. Aussie cash rate, we'll get to that in a moment. Expectation. I saw just one quick thing on that one. I saw that this is pretty much 44 out of 44 economists saying a hold. That sometimes freaks me out a little bit because when everybody's so strongly positioned in one direction, that's when it can pop off the other way. Yeah, so we got CPI coming this week, so expected a little bit of a tick up there. Still, low underneath the 3%. Of course, 2% is the magic number they want to sort of get it down to, and any sort of little tick ups like these are excuses for the market to sort of jam it up a little bit more before potentially sort of selling into it again. But and then I think we have FOMC the following week. All right, so let's go back to the chart. So coming through here, look, the fact that it did rally up into the end of the week, I think that has to be sort of noted. So I don't think it's necessarily going to be sort of like just coming down. I think that sort of little dip down through here, if we jump onto this other chart, this is that little head and shoulders that I've sort of been trying to sort of get to play out. I think really what we need to see now is a takeout of this level, of that low. I think if we can sort of get down below that low there, I think that'd be fine. But, I expect you could potentially see a little bit more of Friday's movements coming through into Monday's session, which could give us a little bit of short-term temporary upside to US dollar. But as you can see, it is sort of coming into this this horizontal through this area here. So I think, even if it does have any upside, I'd be surprised if it gets back past, say, 106, 106.50, 106.60, this kind of area over here. I imagine any sort of move up around to this area is just going to be sold into, and before we sort of start to see a little bit of a downside through there. Flipping along. So we've got gold, and gold has just been absolutely ridiculous. I mean, like through this whole range, this is on the daily, so you got what, 1, 2, 3, 4, 5, 6, 7, 8, 9. So basically 2 weeks just in this little range, more or less here. Realistically, within about 2% or so. So it's been very, very tight, and it was even interesting sort of seeing a little bit of that movement on Friday session, because of course we had that little dump down in the morning, rallied all the way back up, but there was really, all in all, just no follow through. Even as it sort of after that news started to pop out, you can see it tried to roll over here again, buy stepping in, but there's not really a lot you can sort of take with it. I mean, look, buy the supports down here and try and sort of short it from the rallies up the top over here. That's about all you can do through this range, even like sort of short-term trading. It's just so up and down, which, you know what I mean, not necessarily a bad thing, and you can definitely make money sort of with that kind of stuff, but it's not really giving you a great deal of confidence one way or another. I mean, of course, we had this big sort of sell down. Well, we had the massive sell down. We had a stronger second sell down, and now it's really just sideways. So, I mean, you got your ultimate sort of lows down here, and, well, I wouldn't even say you'd have to get up here. I think this would be your top side target would be up over here. But the point being is sort of, till we get out of this box, we're not really going to see much of a direction. So there's not really too much more to add on that. I did see actually a news article saying that China has resumed buying as well. I think that may have even sort of been through November. So obviously, first week of December now, they're sort of like reporting what their positions were that they were sort of holding. So that's increased first time in sort of 5 months. I think that could add to the sentiment of an upside move here, quite frankly, because I can't remember where it was. So maybe somewhere through this area view. So August. No, I can't remember exactly where it was, but it was one of these moments where the headline came. I remember because it was just before like CPI or FOMC or something like this, and they timed it perfectly to come out with that headline, sort of saying that yes, China stopped buying, and I remember the markets went shot straight down. So I mean, obviously, look, if they're buying, that's going to be a big section of the market's going to sort of help with dips. Even if it does get sold down, if they're actively adding to their stores, and I think that's mainly due to geopolitical stuff with potential tariffs and that sort of coming in there. I did watch an article the other day, sort of saying how sort of like jewelry, basically they've sort of been priced out of the market pretty much themselves, just because there's been such a high demand, it's pushed the price up for it, that now they can't even afford it. So, but there was quite a substantial drop off. I think they were saying sort of like in this one area, typically they'd be selling, like 20 ton, and they'd sold 1 ton, which is obviously would have just decimated that local market. Um, oh, yeah, China, local market kind of thing. So, but that was for the jewelry. They did say the demand for bullion and coins, which is obviously serves a slightly different purpose, obviously, because one, you can hold more of it. And also it's more, that is the store of wealth. I mean, you're not necessarily sort of like, buying a whole bunch of bangles to sort of store your wealth. You're buying bullion and maybe coins and these kind of things. But the demand from that's still there. So it shows that sort of like, people are still sort of keen for it, just as to sort of where they can afford to hold it. Like, maybe they're not looking to buy a bunch of sort of bangles at the better part of 3,000 US per ounce. Whereas sort of like, maybe the bullion, where it's actually sort of something you can buy a bulk lot of to actually store your wealth, that they're still sort of keen to sort of hold on to. So look, my feeling is still upside with gold, but on a smaller trading sense, I think sort of like, you gotta sort of pretty much just wait till this sort of breaks through here. Um, so almost a little bit of a triangle coming through here. Not super fan of this, but it could be something that could give us a bit of an earlier indicator. Ultimately, outside this box is where we're going to be going. If we do get that breakdown to the downside, this is my point that I think that if China's sort of actively purchasing, I think that's going to limit the downside. I think any sort of breaks, maybe you feel your technical moves, and we get it moved back down below 26 to say maybe 25.70 or so. But I imagine any moves down here are just going to be bought back up. So I think that's certainly something to keep an eye on. If we do get that sort of rollover in USD sell off, I think that'll be the time that we get this breakout moving back up over here as well. But yeah, for now, very much in out trades. Don't look for too much. A couple of bucks here and there. If you can grab $10, I mean the range isn't too bad. What are we at? 22 to 60. So it's a $40 more or less range. If you can grab 10 or $15, a couple of positions, you can do okay with a bit of return there. It's just anybody trying to sort of swing trade this would just be going insane, of course. So I very much know those things. Silver, uh, better, but still not quite there for the breakout. It was coming at it hard. I did say sort of through the week where about here I said, no, it's too early to get this breakout. I was looking for this pullback to this zone here, which we got it marked out, so we had a fair idea that the buyers were going to be sitting in this zone. Once, twice, it allowed it through after that sort of last bit of data into the end of the week. And that's quite a few little rejections there. So it's not looking super for sort of silver at the moment. But at the moment, realistically, although these are slightly lower dips down, it is still coming back. And you can tell that this is very much the line to beat. And so obviously, if they're trying to sort of short this or they're trying to hold price in line, this is an area that they're going to want to really strongly defend, which you can see how many times it tipped into it. Pretty much every single candle through this whole consolidation period has tipped into this 103. So 103. So it's that dyslexia. That 31, 3130, 3140, 3150 kind of area through here. But what it does also mean is once we see an absence of the sellers at this level, this is when we're going to move very strongly. There was a good example of this back. It was one of these breaks. This problem with having all these charts. I was up against those sort of multi-year highs previously. Anyway, point being is that sort of like the more you bash into the level, once you see an absence of the sellers at that level, that's when we're going to get the big sort of rocket moves. I think it might have been this one over here. If not, it's a good example of it. Sellers obviously held it. And then, once they let it go, it obviously just exploded up. This is very similar with what silver does as well. As it does find these horizontals, you can see that these lows will come back down a bit lower each time to whip them out before fighting its way back up. If you look at where we're at the moment, albeit on a smaller time frame, very similar kind of price action through here. You can see this is where your sellers are. Whoops. It's coming lower each time as well. So I think this is really the area that we want to sort of take out, which we know this as well because we've seen it. Let's just, sorry, one second, put these just to stay on this current interval only. If we put back onto the weekly, you can tell that is the level that we're looking at for the big breakout around this area as well to sort of enact a potential, quite a large potential move to the top side here. It's obviously sort of held in this little range at the moment. RSI is looking a lot healthier now. We're tipping up. We're just coming off 20. We're about to tip over. If we get a big positive week this week, this will push the RSI back up a little bit. That's obviously not it. RSI back up a little bit. And that'll support a continued move, potentially, to sort of run through to get that sort of third wave high up until the, potentially to the new highs. But I mean, we'll deal with that when we get there. But the idea being that, as you can see, as it came back around this area here on this sort of second leg, consolidated, started to tip over at the bottom. As it crossed over, this was the whole move through this area through here. Yeah, there was a little bit of a pullback, but nothing goes in a straight line, yada yada. This could very much be what we could be seeing a replicated move over here. 3150, 3160, this kind of area, a solid close up around here. Like, I mean, if you want to be full safe above 32, a close up around there could very much be seeing a potential sort of silver run up to new highs. So that's ultimately sort of what I'm still looking for, but we need, first things first, above that sort of 3160, 3150 kind of area, and a decisive close, like at least minimum probably a daily close up to that level to really sort of solidify the idea that we are breaking and then moving back up there. US dollar rolling over is probably something that could very much lead into this. All right, so let's have a quick look on lower time frame because as is at the moment, obviously sort of rolling over, coming back a little bit. 61% held. This little rising support held again. I would say you probably want to stay above this level over here. I think sort of down at this kind of next zone down here. Probably wouldn't want to get much lower, particularly not a close on a 4-hour below 30.70. I think sort of like, you can see this was a resistance, it was support. There's more or less support here because obviously they tried to shake it out underneath and that before it sort of moved back up. I think sort of, if you get down below 30.70, I think, it's in trouble and we could be sort of seeing a bit of a move back to sort of 30 and we see this sort of roll over a little bit through here and maybe continue with this range. But for now, it is consolidating the highs. It is holding up here. RSI is looking very all over the shop, spastic sort of through this area here. 1 hour, yeah, look, just sort of flattened out into the end of the week. I still think this is, at the moment, very constructive for an upside move. As I said, you just want to keep this momentum going. If we see this sort of dip underneath this sort of, say, 30.70, I think it's just going to be a little bit more of a, okay, that's fine. And we move back towards that 30 level and just continue basically a range through to the end of the year potentially. Flip across, we got Aussie. Geez, Aussie just goes from bad to worse with Aussie. Like, really, the thing with Aussie is that, the reason it hasn't hit 63 cents or, thereabouts quicker, in my opinion, is that we had sort of a hawkish central bank against everybody else that's cutting, bar Japan, but they're a completely different story. Against everybody else, we were the only sort of central bank, or RBA was the only central bank that was still saying, hey, look, hikes are on the table, even though hikes weren't really. But if you're even contemplating the word of hike, well, you're probably not contemplating the word of cut. It goes sort of like, either hike, hold, or hold, cut. You don't really sort of, go from hike to cut, or we could go either one. As much as they say they're not ruling anything in or out, they're certainly rolling one of those out at the time. And with the RBA, they're sort of saying that, look, do we get two quarterly CPI figures that are inside the band, then we're not really going to look to cut. And this is why, sort of with the RBA coming up on Tuesday, they're going to be, or they have been saying, everybody's been saying, look, they're going to hold. Because they're saying they want to, like Bullock said herself specifically, that we want to see two quarterly figures. Well, we haven't even had one of those. So it sort of stands to reason that that's pretty much a non-consideration. If they cut, Aussie is just going to get walloped. So this week we had GDP out. This is around this point over here. It was looking, somewhat constructive. It was holding up, had a strong base along through here. We saw US dollar in that sort of spiking up, and Aussie was really just sort of holding sideways. Euro broke to the lows, Aussie held sideways. So it was doing okay. But when we had those GDP figures out, that was really what sort of just shook the market. And as you can see, it really got walloped through that area there. I mean, that was, where we go to here? Let's play it down here. I mean, that was a 1%, 1.2% drop off just off those weaker numbers. And the idea with this is that sort of obviously, look, if the economy slows down enough, you go into recession. And this is the balancing act of what the central banks are trying to do, is to sort of obviously curb inflation, make sure that doesn't spike up again, and obviously continues to come down. But at the same time, you got to balance that against, the company, the economy, country, the economy, more or less going into recession. And with super weak numbers and also failing to beat expectations or even meet expectations, that's what got the market spooked and said, look, well, you know what I mean? Maybe they are going to change their tone when they see that we're on the cusp of a recession. And you start to see all these headlines coming out with people, we're actually already in a per capita recession or some sort of stuff like this. Like, you know what I mean? This is where you got to ignore and sort of tune out a little bit of this news sometimes because, people can twist this stuff and they can say, we're really already in a recession, asterisks. You know what I mean? And it's just sort of like, well, you either are or you aren't. You could say, oh, if we fudge this number and don't look at this one and don't include this, but include this, turns out we actually are in recession. But that's not what the definition is, and that's not what the economy, and that's not what people sort of act off. Excuse me. So we're not in a recession as of yet, but obviously with those super weak numbers, it changes a little bit of their approach of the central bank. Whereas their main mandate, or that they've been working towards, is fighting inflation. Now you've got to consider the recession side of things a little bit more, because obviously sort of that wasn't so much of a factor before, but now it is. So yes, you may be sort of combating inflation, but you're doing it at the expense of, output and the actual strength of the economy. So it's all very well inflation's coming down, but if we go into a recession, no one's got any money anyway. Um, but that is kind of what they want to do. They want to squeeze on people not to have so much money, which is what drives, if you haven't got money, you can't buy or you can't pay the higher prices for things. People then have to lower those prices a little bit, or not, maybe not lower them, but not increase them at such a rate, which is what will reduce inflation. So, you know what I mean? Like it is sort of like it's certainly the market reacted strongly to that, but all in all, that is what the market is trying. That's what the central bank are trying to do. They're trying to sort of reduce that stuff. Anyway, so that's a bit of a sort of a bit broader sort of shot of it all. Where we're at in terms of with the chart, we've still got this measured move down here at 63.41, which is that range measured move. This will also, if we get onto a higher time frame, take you just below those previous wicks that we had back in August, where we had that sort of market freak out. I think I had a look at this actually just before. I think it was like 120 points, 130 points in 2 hours. That was crazy. But look at the reaction here. Whop. And the subsequent reaction up to the top over here. So look, there's a lot of support around this area here. If we jump onto, which was the other chart I had? You can see that sort of like, yeah, this was obviously an area of support, 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 resistance, resistance. This actually applies more to a weekly timetable as well, time frame as well. So we are coming into an area of support. We've got this large rising support as well, coming all the way through here. So you've got a horizontal, you've got a rising support. This somewhat kind of almost lines up with a little bit of a channel. Not a big fan of this, as it is super wide, but this angle up here is very much this angle through here as well. So horizontal support, rising support. This is the point that I wanted to have a look at, is that this is what Aussie, and I've covered this a few times with Aussie, is that it does these sort of little, this is on a weekly time frame, it'll build itself a little support, fake out the bottom, trap in a bunch of shorts, and then rip up to the top, stop out some longs. Did the same thing through this section over here, did the same section through this section over here. And each time you can see that the resulting move was quite substantial. I think this may have been into, where it was end of last year. Yeah, so this was our move sort of through November in that last year. So finish off very strong. Doesn't mean necessarily we're going to get the same again, but as you can see, this has been absolutely walloped. From the top side here, we're looking at about a 10% move. 8.2% from the top so far. That's a big sell-off in 2 months. And as you can see, it's pretty much just one-way traffic. We had this little flare-up section through here, whereas, okay, maybe for a second, but obviously, bang, and we've smacked it down the bottom here. So what I'm kind of looking for is potentially this kind of move here, where we've had the solid candle, big ones that look like maybe we're holding, no, bang, cruise down underneath, and then starts to drift back up, similar to this area, and this area. I do think we could potentially see a bit of a lower low. Maybe we take out this bottom wick here. We do the measured move of that sort of range around that sort of 63.40 area. But then I would imagine that these kind of supports would kick in and potentially give us a little bit of a midterm relief and midterm bottom. And if we do start to get that, then we can start to sort of like, drag this across and we can see where can it get back up to. So say that does come down to these bottom wicks over here. And we can start to sort of look and work it, as to how high it might sort of come. But of course, first things first, let's get the turnaround. So I think obviously sort of like we're oversold on the weekly. Still not looking great. I would have liked to sort of see this actually continue to tip up a little bit. The daily does have a little bit of a negative divergence. Actually, maybe we've broken through that actually. Yeah, that might be a bit negated by now, I think. Yeah. We did have a little bit of a sort of negative divergence. We were sort of pushing up a little bit through here, but obviously that's just crashed back down through with that sort of close into the end of the week. So yeah, look, Aussie's looking pretty sick, pretty weak, and as you can see, any sort of little rally attempt has just really just sort of been sold into each time. This little falling resistance, I think this could be a good early indicator of things sort of turning around, but I would still be sort of waiting to see what happens through this week. As I said, we got CPI. If that comes in a little bit hotter, the US, then that's going to weigh on Aussie again a little bit. And if the RBA come out and sound any sort of form of dovish, even if they do hold, again, that's going to weigh on Aussie as well. So yeah, I think there's certainly some work for Aussie to be done. But yeah, if you can get back up into these kind of sort of maybe 64, 65 areas, we could be seeing some sort of recovery. But for now, it's yeah, certainly looking all but absolutely woeful. Very, very weak. All right, flip across copper. Copper's holding up, and this is another reason that just again just on Aussie there that yes, copper has been absolutely smacked, but it is holding for now. So we've got a little bit of a triangle, so that we called sort of through the week or whatever it was. It's broken out and trying to get out of this little resistance, the sort of top side over here. Obviously, as you can see, even this last kick up sold back into. So we got this little sort of consolidation area up the top over here. This is something that actually probably could weigh on Aussie again a little bit. The fact that we've gone out a couple of times, and obviously sellers are happy to sort of nail this each time. If this breaks back down towards the bottom of this range, this is again, that's going to weigh on Aussie. But even as this has been slightly, obviously a little bit more sort of positive through the week, as you can see, sort of moved up and then it just sort of consolidated around the highs. That really hasn't sort of helped Aussie at all. So it isn't really sort of responding a great deal from sort of any sort of copper movement at the moment. But you want to see one of these moves come out here and hold. Once we see that happening, then we might just see sort of Aussie appreciate a little bit. But as you can see, there's a few factors that weigh into it, and yeah, that's obviously not something that Aussie's taken too much consideration of at the moment. Yeah, look, not a great deal to say about this. I think still this little smaller range that we've got marked out here, this is where you need to sort of stay up to the top side of. This actually is looking very constructive through here because obviously we got knocked down, hit that price target, consolidated, second run, smacked, third run actually closed out here a couple of times, and then end of the week, bang, smacked back on the nose there. So yeah, it's not a great deal to sort of report with this. This does put it in a little bit of a fake breakout area, which could result obviously coming back down to the lows over here. However, I think this is more just knee-jerk reaction to that data that came out opposed to your normal sort of price flow. Price action, they were happy to buy it up, buy it up. Okay, we got a little bit of sort of contradictory, conflicting data. Well, bang, we put it back down in here. If it comes out the bottom side here, then we look back down to sort of 410. But I would be surprised. I think more or less we're just looking at more of this grind before another attempt out to the top side. I wouldn't be looking to short this at the moment. And finally, finish off with China because it did attempt to break down here. Actually, sort of put it up on my guy. Here we go, we're breaking, and we had a little bit of this sort of wedge through this period here. PBOC very much trying to sort of like keep a cap on it. As you can see, the fixings are quite off the mark. Generally, the fixing will be within maybe 200-300 points or so. These are obviously going quite quite a fair bit lower, which did weigh on the market because it was just up around this resistance area that they started to sort of come out the first time with that sort of fixing. And as you can see, the resulting action was basically just a sell-off through this period. So same sort of thing with DXY. We saw it potentially dipping its nose down, dipping its toe underneath these support levels, but obviously ultimately bang, fired back up into the close of the week. Found resistance where we thought, where we had it sort of marked out. We'd seen this support, resistance, and it played its part coming into the close. Look, same sort of thing with DXY. If we see a little push up with DXY, I think we retest the 730 area. However, I do believe that this has probably got a little bit more of a pullback down over here. This is showing that the PBOC is definitely trying to sort of anchor this a little bit. Um, and I think any sort of move up here is just going to result in more of this and continue to sort of push to the downside here. So once we see this actually start to cool and come off here again, I think this is also something that's going to be spurring Aussie on a little bit. Because Aussie's just, I mean, copper's been smacked, yuan is super weak, US dollar's still holding up. These are all sort of negative Aussie factors. It seems to have decoupled a bit itself from equity markets a bit this year. Equity markets have just been straight up, well, through a grind, but more or less, if you look from where they were a couple of months ago, it's just straight. I actually sort of popped on a little chat podcast thing from November last year, and they were sort of referencing SPX at sort of like it's at 4,500, and maybe it pulls back to 4,200. I think we're over 6,000 or something. Well, I know we're over 6,000 now. So yeah, I mean, quite a significant jump. That's about 30% or so through the year. So yeah, I think equity markets is not really what you look for with Aussie in terms of risk at the moment. It just doesn't seem to be having any sort of factor on it. Maybe when it sells off, that'll add to the negative side of it all. But certainly as it's moving up, that's not giving anybody any confidence in Aussie. But this one breaking down, I think this will. I think this will sort of see a little bit of a rollover. You probably would expect to sort of target around this area that the PBOC are trying to sort of put the fixing each day. So I wouldn't be surprised if we do see a little bit of a rollover and a move down here. And this could give Aussie a little bit of a push off its lows. All right, so I think that's pretty much it for the charts. Not a great deal. It's a bit, yeah, all over the shop. I mean, we're just really waiting to see what happens with the US dollar at the moment because, as we sort of know with it, the way that US dollar DXY turns around, it doesn't turn around nice and clean. Excuse me. We can see through these areas, down, 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 and it flies back up. So it's very hard to trade these sort of things around the tops. Once it hits its trend, well, it holds, as you can see, for quite a time, and it's quite a good trade, and very sort of structural and moves along well. And likewise, as it has been sort of moving up through this period here. But as I said, once it does actually commit to the downside, I think that we could start to see a trend that could carry us through to maybe sort of mid-January, mid-February at least to sort of see this thing pull off a little bit. If we actually sort of chuck this here, we do have the fib already done up. Where are we at? So it's just hanging around that 23. So 38 or 50% pullback is probably likely, but what I'm actually targeting for DXY is this election gap through here. I haven't actually done this. If we do drag this one out, depending where you want to put that actual break from, that also gives you a measured move down to close that gap. Seems to work out pretty well there. I mean, depending where you put it, even if you put it here, doesn't really matter. It's a couple of centimeters. A couple of points either way. But yeah, certainly once we do get that breakdown underneath Friday's wick low, underneath 105.45, I think that's really the area that we target. Let me see how we go there. All right, and quickly have a look at the news. So we got CPI and PPI for China coming out. So CPI up a little bit here. I'll have to sort of wait and sort of see how the market reacts to this so much, and that I feel like obviously CPI is a factor with a lot of things, but their numbers are quite low, and I don't really trust their numbers a great deal anyway. But yeah, we'll sort of see how that sort of reacts. But I mean, typically, if it were to have a sort of actual normal reaction like the other markets, any sort of move up in CPI should result in a little bit of a stronger reaction from the yuan. So USD CHN down. Checking along. So got business confidence on Tuesday morning. We don't really have any other numbers to sort of work off with that. obviously quite high at the moment compared to sort of what we have seen over the last couple of months. So that's a positive for on Aussie if we do come in there. Trade balances. So cash rate, this is obviously pretty much, look, anything can happen. And when everybody says 100% it's going to be something, that's when I see a fair bit of risk because the return on them actually undoing that, if they did somewhat decide to cut for some reason, which would absolutely shock the market, Aussie will get absolutely decimated on that. But I would say most likely they're going to hold, given what Bullock has been saying. So I think really the press conference at 3:30 is the one to watch for that, and see if she sort of holds on to her sort of more bullish stance. I think she'd have to address like the GDP and the slowing of those sort of numbers. So really, you want to see how hawkish she still is, even even with a hold. Interesting one was with New Zealand USD the other week, and they cut 50 basis point, and then New Zealand dollar shot straight up. Uh, Two things with that one, obviously, it was a more a buy the rumor, sell the fact kind of thing, and then the actual sort of hold was a bit more of a hawkish hold. Sorry, hawkish cut, which almost sort of seems a bit contradictory, but it is what it is, and that actually sort of did quite well for it, at least in the short term. Moving forward, not a great deal sort of through here. CPI will definitely be one to watch. 12:30 on the Thursday. So I mean, numbers are still fairly low. So, I mean, again, it's in a fairly area. Unless you get some big, massive shock spike out and goes up to 3%, I don't think this is. At best, I'd say the market will sort of price this in prior in that it won't sell off the US dollar based on that. So we'll see. Then we got 50%, 50 base point cut coming from Canada. Got employment numbers. That's right. The first time in a while they actually got this one right. So they've been sort of spamming 20,000. If you have a look at the expectations, they've been spamming 20,000 every month for ages, and they've just been drastically off, 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 off. And then we finally had one that sort of came in a little bit worse than their expectations. They're a lot worse than their expectations. So 15, so spam another 20,000. 20,000 can't go wrong. Just bang it, spam it each time. Unemployment rate, so we're expecting this to sort of tick up here. So unemployment rate going up will be somewhat negative for the Aussie because obviously sort of like, less people in jobs and that kind of stuff. They'll be more inclined to sort of think more in the sort of, hey, we need to help out, and how do we do that? We do that by cutting rates. So dovish kind of talk with it all. So if this comes in at 4.2, even if it is expected, that's going to be a little bit sort of weak for the Aussie as well. What we got here, so 25 by Swiss Bank, Swiss National Bank, whatever. 25 base point cut. Meh, doesn't really affect us too much. Geez, we got a whole bunch of central banks coming this week, don't we? Cut 25 base point by Euro. Okay, PPI, employments, just their press conference there, and then a great deal to sort of finish off the end of the week. So actually, you have a fair bit of data coming this week, some large ones, not everything directly relating to sort of what we're trading, but something to keep an eye on with the markets as well. The big thing with Euro, obviously, like everybody's been talking about them cutting for a while. So the shock there is if they cut by more. If they cut by 50 base point, that's going to give, obviously, because it makes up such a large part of DXY, a bit of a push up to the top side there as well. So certainly, I don't think DXY is, ready to completely roll over. I think the cracks are forming. Now you just sort of need the right amount or the right sort of style of sort of fundamental data to sort of back up that sort of breakdown. But it'd be interesting to see what happens. We've got a couple of weeks left. And then I'm actually off to the States next week. So probably do a weekend review, but then that'll be me pretty much almost sort of wrapping up for the year. All right, that's it from me.